Wolfpack, we're here on Bitcoin. We're going to be going into the most compelling piece of evidence for an invalidation to my prediction for a Q4 bottom on Bitcoin, right? That's a very important video to make. I don't think people necessarily understand that there is quite compelling data, okay, that would suggest a bottom later than Q4. However, my prediction, as you guys would know, is a Q4 bottom. I think that the data is most compelling for a Q4 bottom. I've gone over that data many times in the past, heavily based on the 4-year cycle theory, heavily based on what the Federal Reserve said the other day, well, slightly based at least, but mainly the 4-year cycle theory, and also, some old indicators on Bitcoin that flashed the bottom, back in June, and we're coming back down for a Q4 bottom retest. So there's a lot of things that would suggest a Q4 bottom. In my opinion, it's an overwhelming amount of evidence. And, again, if you want more information on that, yesterday I actually made a video covering all of that evidence. But today's video is going to be trying to invalidate my claim. So, I think it's very important when you make a claim, when you make a prediction, it's very important that you look at the other side of the argument. And so, for that reason, I'm going to be looking at what I see to be the strongest valid argument against a Q4 bottom. The strongest valid argument that would be suggesting a bottom actually probably in Q1 or Q2 2023, okay? Now, I don't agree with this, and I'm going to be going over after I lay it out why I don't agree with it, because I don't agree with it. But it needs to be stated because it is valid. It is completely valid. So the argument is essentially this, okay? And I'll try and get it as quickly as possible for those of you who might not want to watch the video fully, okay? So essentially we have the S&P 500, okay? We have major bottoms on the S&P 500 over the course of its history. The major bottoms we have are September 74, August 82, around October 90, July 2002, and March 2009, and of course, the potential, it's not confirmed yet, right? Not confirmed at all. In fact, I'm going to put a dashed line because it's not confirmed. But the potential bottom in June 2022, okay? We have those bottoms. So we have 1, 2, 3, 4, 5 major bottoms on the S&P 500. Now, the interesting thing about this is the following. Every single time we have seen the bottom on the S&P 500, let's bring up the lines. These lines are adjusted to the exact same dates as we have on this chart here. Every single time we have seen the S&P 500 bottom, we have seen interest rates start to decline, meaning we have not seen a bottom on the S&P 500 while interest rates are rising. And even as per my Q4 bottom prediction, I'm not expecting the markets to wait for interest rates to stop going down before they bottom out. Okay, so this is interesting because the S&P 500 obviously is very closely connected to Bitcoin, and hence some people, and I'm going to invalidate this in a second, some people would assume that, hey, hold on a second. If we don't see the S&P 500 bottoms until rates go down, and rates won't be going down until maybe like mid next year, I don't know, somewhere around there, then how can you expect Bitcoin to bottom in Q4? That's what they'd ask me, okay? And my main response would be this. First of all, that's a very strong argument. I've said it very quickly. I haven't gone into it too much, but it's a very strong argument, and there's no doubt about that, okay? And actually, before we invalidate it, let's add to it, because there's more evidence to it. That's just the baseline. There's more evidence. That's a very strong argument. 5 separate occasions we haven't seen the S&P 500 bottom until interest rates have gone down. Yeah, it could be a coincidence, but most likely it's a strong trend, okay? That's a pretty convincing argument against the Q4 bottom, at least for the S&P, okay? So let's go ahead and build on that. Let's expand on that. Well, we can go ahead and be like, okay, well, what can we do to make that argument stronger? We could actually take a fractal from 1998, okay? And we could also do one over here from 2006. There's 2 separate fractals we could take. This pattern repeats over and over again. Let's go ahead and take the one from 1998 and apply that to the current price action. And if we zoomed in, we could get it a bit more perfect. We've gone over these fractals in the past. We're not going to go too in depth into it. We can see that fractal is targeting around 2,900, and that will be bottoming out in May 2023. We can take another fractal here from the 2008-ish period, okay, and we can take that. We could say that fractal, if we adjust it a little bit, is going to be bottoming out at around 2,300 in April. And then we can go ahead and take a third fractal. This one's a little bit more sketchy, I'll be honest with you. In fact, we'll just leave it. We've got 2 main fractals there, 2 major fractals. If we zoomed in, we can get them perfect. In fact, we have adjusted the one from 2008 quite closely here. And you can see that fractal is very convincing. That's a convincing fractal. It's pretty accurate, right? And we're actually following it quite extraordinarily close, considering it's been going on for a full year and we haven't deviated that much from it. That's a convincing fractal. So not only do we have the S&P 500 itself saying hey, okay, we don't really bottom until interest rates go down. We also have two separate fractals from two separate periods of time, both of which are measurable by the same metrics that suggest that we'll be going further down into April or May next year before we bottom out. And that, coincidentally, maybe, is generally speaking where people are expecting interest rates to start declining, April or May next year. So there's a lot of evidence there. All right, there's a lot of evidence there that would say, okay, well, S&P 500 is not going to bottom out until April, May next year. That's basically what all this evidence suggests, okay? And whether that's true or not, it could be true. It very well looks like it will be true, okay? Now, obviously, we can't predict what the Fed's going to do. That's for sure. But it looks like that could be the case. Now, how can I argue against that? How can I debunk that? And I'm going to do it right now. I'm going to show you how I can debunk that. All right, let's go ahead and take a look at the shorter term of the S&P 500. Let's delete the fractal, delete that tab. Delete this. Okay, let's go ahead and look at the shorter term for the S&P 500. When did the S&P 500 top out? When did it top out? Let's go ahead and draw a line where the S&P 500 topped out. The S&P 500 topped out on January 4th, 2022. Bitcoin, on the other hand, because remember, if you're assuming that Bitcoin's not going to bottom out until into 2023 due to that argument mainly, you would be assuming that Bitcoin and the S&P 500 work hand in hand, okay? So the S&P 500 topped out here in January 4th, 2022, of course. And then Bitcoin, if we go to a daily chart on Bitcoin, let's delete everything we have here. Go to a daily chart on Bitcoin. Let's see where Bitcoin topped out. Bitcoin actually topped out, right, here on November 10th, 2021. Okay, so essentially Bitcoin topped out 2 months before the S&P 500. So immediately, there is strong evidence, just by that alone, that Bitcoin and the S&P 500 don't have to act in tune. And it's supporting that evidence even more. You might say, okay, well, that's not really convincing. Well, supporting that evidence even more, by January 4th, Bitcoin was already down, right? 34%, 35% from its peak. So not only, in fact, if we count the wick that happened before that point, Bitcoin was actually down 37% from its peak. So not only did Bitcoin top out 2 months before the S&P 500, by the time the S&P 500 actually topped out, and these are the things that you're assuming go hand in hand if you're predicting a 2023 bottom, by the way, right? Not only did it top out 2 months later or 2 months earlier, Bitcoin was down nearly 40% by the time the S&P 500 topped out, right? It nearly halved in valuation by the time the S&P 500 topping out. So acting like these things go hand in hand is simply not the case. Yes, they are correlated, right? They are correlated. There's no doubt about that. They are correlated by a coefficient of about 0.7%. However, they are not completely identical. They're not completely connected. That's not the only example. Now, look, it's the only example of Bitcoin because Bitcoin hasn't been around long enough for the S&P 500 to have much of an effect on it. That's basically for sure. But in general, this is just a fraction of the evidence here. But essentially this, right? Bitcoin doesn't, and this is my counter argument to it that I've used quite a lot, right? Bitcoin doesn't have to top out at the same time as the S&P. Hence, it doesn't have to bottom out at the same time as the S&P. Hence, we could very well have a Q4 bottom on Bitcoin, and we could have a 2023 bottom on the S&P 500. Yes, it would be expected that they bottom out in similar times, but seeing as we've just come out of a bull market in which Bitcoin topped out 2 months before and was down 40% before the S&P 500 topped out, acting like they have to work together here is irrational. So I don't have to invalidate this entire thing. I don't have to sit here and say it's incorrect that the S&P 500 only bottoms out when interest rates go down, because that's not the case. It is correct. The S&P 500, generally speaking, it might be an exception this time, but generally speaking, it only bottoms out when interest rates have started decreasing. I don't have to debunk that. All I have to say is that, well, Bitcoin and the S&P aren't perfectly connected. Right? And then I can still keep my Q4 bottom prediction. And not only that, I can use the vast amount of evidence that suggests the Q4 bottom prediction. And I can remove all of that doubt from my mind there. Right? Because you might say, okay, well, look, this is a counter argument you could say towards me right now. You could say, well, okay, so Bitcoin topped out 2 months before the S&P 500. If you're predicting a Q4 bottom, you're probably predicting Bitcoin to top out 4 or 5 months before the S&P 500. I'd say, well, yeah, I am, I guess. And, if it topped out 2 months before, why can't it top out 4 or 5 months before? That's my response to that. But also, yeah, okay, there's a little bit of doubt there that you could implant. But also, if you're considering the vast amount of evidence for a Q4 bottom, I think the extra 2 months is adequately made up for. That's my kind of suggestion there. So, that's the strongest argument I can find, really, I mean, that's the strongest argument I can possibly find here. I'm being genuinely serious. I don't think there's a stronger argument because it's a very strong argument. I'm not trying to understate how strong it is. 5 separate major bottoms on the S&P 500 have been predicted by interest rates decreasing. Okay, that's a strong argument. And I think I have the evidence to confidently kind of say, okay, yes, it's strong, but I've got more evidence for the opposing argument, enough so that I can kind of discount that. So that's my opinion on that, and that kind of even further supports the Q4 bottom line prediction. Because if the strongest argument for a bottom in 2023 is the macro is pretty bad and we have to wait for interest rates to decrease before we can bottom out, then I can look at what's happened historically. I can look at the fact that Bitcoin and the S&P aren't perfectly connected, and I can say, well, that's not necessarily the case. So sorry for dragging out this video. I know I've been stuttering a lot in this video as well. I'm not really sure why. I think I just didn't do enough thinking about it. I'm kind of freestyling it. But regardless of that, let me know what you guys think in the comment section below. Cheers. Go to my YouTube channel homepage and click on the join button. You will see a tab that comes up which shows you all the information of the VIP membership with the Wolves of Crypto YouTube channel. What you get in return for 40 AUD a month, which works out to be around 30 USD a month, is 4 exclusive trading setups per week, which have been extremely profitable in the past. Prioritized reply to comments on my end. A trading psychology lecture, which is extremely useful, and some people have actually said that's the most useful video I've ever made. It goes into a deep dive into the actual mechanics, psychologically speaking, around trading. And then also an exclusive Telegram group access link, which has over 200 members currently. And so you can go in there and discuss the market 24/7 at any time of day. We've got members from all around the world in there. So go ahead and sign up to to VIP membership using that join button there. Moving forward, we're going to talk about BitGet, and this is the exchange we use on the VIP membership. So this is all the VIP members use this exchange. Now, I actually was using this exchange before I had a partnership with them. I was the one who reached out to this exchange asking for a partnership because I genuinely think it is such an improvement on the major exchanges like Binance and Coinbase. Why do I think that? Well, first and foremost, it's got 0 fees on spot pairs, which is saving you a bunch of money. On top of that, it's got 5 times lower fees than Binance on futures trading. So immediately it establishes itself as an extremely cheap and efficient exchange to use for everyday trading and even investing, honestly, if you're investing with considerable chunks of money. On top of all of this, it holds true to the values of cryptocurrency. And it does that by being non-KYC on your end optionally, which means that essentially, all these other exchanges here, heavily centralized. They require you to put your identity in. They require you to kind of, trespass and encroach on the values of cryptocurrency. BitGet doesn't ask you to do that. You can do it if you want to for tax reasons, but it doesn't ask you to do it. It's not mandatory. You can use this exchange globally, and you don't even need to link your identity to it if you don't want to. Now, that doesn't take away from the safety of this exchange, because this exchange actually has a protection fund, and we'll click on the link here. And essentially, they have deposited 6,000 Bitcoin and 80 million USDT onto this exchange to make sure that in the occurrence that someone loses their money on the exchange via a hack or whatever like that, you can make a request here and you can get that money refunded to you, provided it was not the fault of the exchange. So that's very interesting as well. Not many exchanges have anything like that. So go ahead and sign up to BitGet using my referral link in the description below, and you will additionally gain access to a reward center with over 4,000 USD in rewards. And on top of that, adding to the list here, you also get 10 USD dropped into your account straight away after you make your first trade using my referral link exclusively. So go ahead and do that. You're supporting the channel in doing that as well. It's completely free and it takes 5 minutes. Thanks, guys. And then lastly, we've got the Crypto Academy. Now, this is for people who want to learn how to trade. So if you're interested in learning how to trade, I recommend this course. This is a course developed by myself and Megawell Crypto. If we scroll down at the bottom, you can see Megawell Crypto, big analyst in the space. We work very closely side by side, share a lot of the same ideas. We also challenge each other on some ideas. And so we've got 2 perspectives together in order to form this one course. You can go to the website and read the bio. Essentially, it's 10 units. It's very comprehensive. It's very extensive. And it's going to teach you everything you need to know about trading in a cryptocurrency market. And to be honest, any financial market. It's going to teach you how to learn those charts. It's going to teach you the right mindset. It's going to teach you how to find the trades, etc. You can join us here. Go to the website, scroll down at the bottom, and chuck us an email at cryptoacademycourses@gmail.com, and we'll get back to you with the rest of the information. Thanks for watching, guys. Cheers.